Hello, everyone. Matt Clark, research analyst for Money Markets here with your Bull and the Bear podcast. If you haven't already, I do want to make sure you're subscribed to our YouTube channel. This is where you're going to find a lot of great content and features with chief investment strategist Adam O'Dell, Green Zone Fortunes co-editor Charles Sizemore, and myself each and every week. Also, check out the mothership. That is moneyandmarkets.com. This is your home for safe, sound, smart, simple, profitable investment information for your portfolio. And you can set up your own watch list of stocks and track their Green Zone ratings performance on the website, and it's all for free. So go over there and check it out. And don't forget about our premium investment service that is Green Zone Fortunes. Adam, Charles, and I and the team work very hard, to give you the best stock recommendation that we can each and every month. We'll try to put a link in there somewhere around here so you can find out more about Green Zone Fortunes. Now, on with today's podcast. In the world of equity analysis, sometimes you roll with a crowd and sometimes you're kind of on an island by yourself. It's easy for us to say that something is going to do this or not going to do this. And sometimes everyone, it's kind of a consensus. We all agree. And then sometimes some of us are just kind of left out there. Rest of us are going one direction, others are going another direction. And when you're with the crowd, it doesn't necessarily mean that you're right, but it is a nice feeling of validation as an analyst when your analysis is backed up by others in your field. Now, back in December, I revealed my big, bold prediction for the stock market in 2022. You can check that out on our YouTube channel or on your favorite podcast syndicator. It was out around the first week of December is when I put that out, so check that out. But what I basically told you was that I thought value stocks were going to rise to the level of growth stocks in 2022. Because for the longest time, growth stocks have just been kicking the tail of value stocks. Investors are pouring into growth stocks and trying to make tons and tons of money off of high growth stocks, and some that even yield strong dividends. Now, on a poll on our YouTube page shortly after, found that 48% of you actually disagreed with me and believed that growth stocks were going to continue to dominate the market again. And I kind of expected that, because that's been the trend. But remember, I prefaced the prediction with the fact that I really don't have a crystal ball or any other way to accurately predict the future, especially with the current state of our market where indexes are up and they really shouldn't be. A few days ago, however, I did read an article on a prominent financial news website that kind of validated my prediction. Bloomberg News recently surveyed about 106 institutional fund managers and analysts. These are big-time fund managers that are managing multi-billion-dollar funds and analysts that are backing them up. And they asked them what trends they expect to see in 2022. And surprisingly, more than 23% of those surveyed said they expect to see cheaper value stocks to be the place to be this year. Now, it falls in line with my bold prediction of 2022 that said value stocks would overtake growth stocks. Now, there's no secret that growth stocks have been outperforming their value cousins. MSCI Incorporated said that growth stocks around the world have returned 22% annually, including dividends over the last 5 years. Value stocks have only returned about 9.8%, so they've more than doubled the performance of value stocks. Now, with the Fed keeping interest rates low, profits from high growth stocks are worth more, thus keeping investors piling money into those strong equity positions. However, in December, the Fed pointed to reducing its bond purchasing and hinted at future rate hikes coming in 2022. Higher rates means those future profits that investors bank on with high growth stocks aren't worth nearly as much as they are when interest rates are where they're at right now. And the market is starting to take notice of that. Now, since the summer of 2021, growth stocks have been outperforming value stocks. There's no secret there. According to the comparison of MSCI World Value Index and the MSCI World Growth Index, this takes both world growth stocks and world value stocks and puts them in a big index, and then I compared the two. But if you zero in at the end of 2021, you can see that growth stocks have started to pare back while value stocks continue to increase their returns. Now, let's look at just the first few days of trading here in 2022. In the first day of trading in the new year, growth stocks outperformed value. Again, not too terribly unexpected, but that all changed the very next day. So far, value stocks have returned 1.38% in just the first week of trading, while growth is actually down 0.37%. So growth already outperforming value, already outperforming growth. Keep in mind, these are global stocks, and in the U.S., growth outpaced value by a good margin in 2022. But I think this is a global trend that's going to resonate here in the U.S. this year. It just may take a little more time to let that set in. Now, how can you profit from this potential prediction? Well, I gave you one way during the podcast in early December. But I found another one. It's a strong exchange traded fund that's got great momentum and a pretty decent dividend yield. The Vanguard Value ETF, it trades on the New York Stock Exchange under the ticker VTV. That's V as in Victor, T as in Tom, V as in Victor. It's an ETF that invests in large cap value stocks here in the United States. It currently has more than about 340 holdings, but its performance this year has been solid, at least over the last 12 months. Now, VTV has been a big mover over the last 12 months. It started 2021 at around $115 per share. It's now up above $150 per share, indicating a 30% move in the last 12 months. In the last 4 weeks, VTV has risen 5.2% compared to the S&P 500, which has only gone up 4.4%. The bottom line here is VTV is outperforming the broader market both in the short term and in the long term, and it only holds value stocks which have been underperforming their growth cousins. I want to dive a little deeper into individual holdings of the ETF, but there's more than 340 of them, so I kind of did a sample. I pulled a few, about 100 or so, to see what their scores were on our proprietary Green Zone rating system, which you can find on our website, moneyandmarkets.com. So I sorted out the top 10 of the sample size of about 100, about 104, and the rating scores were actually pretty solid. The top 10 stocks come from finance, technology, and the healthcare sector, and their ratings went from a high of 95 to 83, all those in the strong bullish recommendation category according to our proprietary system. Again, you can find it and actually use it on moneyandmarkets.com. Now, even if I wasn't suggesting that value stocks were going to pull ahead of growth stocks in 2022, I still think that VTV is a strong buy for your portfolio. However, I do see the trends on a global scale suggesting that value stocks have the potential and have already outperformed growth stocks. With the Fed potentially pushing for 2, possibly even 3 rate hikes in 2022, those rate hikes could play a huge role in pushing investors out of those high growth stocks and into good old-fashioned value stocks. Again, I don't have a crystal ball that can predict the future, but things seem to start aligning now to give value stocks the boost that they've been missing for the last several years. And it also feels pretty good for me to have hedge fund managers and analysts see the potential for value stocks coming this year as well. By the way, like I said, and I've harped on it before, and I'm going to keep telling you more about it, you can use our Green Zone rating system for free. Just head over to moneyandmarkets.com and type in any company name or symbol in the search bar in the top right of the homepage, and you'll be able to pull up its rating, the breakdown of its rating based on our 6 metrics. You'll see the stock chart. You'll see some financial valuation metrics. You'll also see any stories that we've written about each individual stock. And did I mention it is completely free to use. Also, remember, go vote on our weekly poll. You can find it on the community tab on our YouTube channel. But if you do have any question about a particular stock or a sector that you'd like either myself, Adam, or Charles to take a look at, or maybe all 3 of us, email us. That email address is feedback@moneyandmarkets.com. We'll put that right down below here, feedback@moneyandmarkets.com. Love to see your feedback. Love to answer your questions. And love to take a look at what you're looking at in the market. If we use your question, or maybe you give us a video, you do a video of you asking the question and we stitch that into our videos, we're going to send you some very, very cool Money and Markets gear, including a t-shirt, sweatshirts, hats. We've got all sorts of stuff. We're pushing the boss to get even more stuff. So do that. Send your question. That's the first step. You can do that by sending it to feedback@moneyandmarkets.com, or you can comment down below on our YouTube channel. And if we use it, we're going to send you some Money and Markets gear. Also, head over to moneymarkets.com, sign up for our free daily e-letter, use that Green Zone rating system, set up your own watch list of stocks so you can track how they're doing in our rating system. You can do all that for free at moneyandmarkets.com. Until next time, everyone, I am Matt Clark, research analyst for Money and Markets, wishing everyone safe trading.